What's up, YouTube? Welcome to my second episode of Sunday Capital, where we discuss the major financial news and highlights of the week. Let's jump right into it. We start with the US. Trump impact big American companies going bankrupt at fastest rate since 2010, says S&P. Large US companies filed for bankruptcy in early 2025 at the fastest pace since 2010, as rising costs and high interest rates strained businesses. So this is not good news, of course, but in times like this, when interest rates are high, it's much more difficult to borrow money. So if your company is not doing so well, then yeah, it might go under. Companies, particularly those with weaker balance sheets, continue to face challenges as debt matures and needs to be refinanced at higher interest rates than at time of issuance. What does it mean if you have debt and you have need to pay interest over that? Um, when interest rates go up, you need to pay more interest. So when your company is doing so well, you'll likely go into trouble. So when it needs to be refinanced, then yeah, you get into trouble because you cannot afford it anymore. This affected some major companies like Forever 21. These companies mentioned here. Let's stay in the US for now. March home sales dropped to their slowest pace since 2009. Sales of previously owned homes in March fell 5.9% from February, and inventory was up nearly 20% from a year earlier. It's starting to put a chill on prices. So, what's going on? More inventory and slower sales are starting to put a chill on prices. The median price for an existing home sold in March was 3,700. This is still an all-time high for the month, but it's only up 2.7% from last March. That annual comparison has been shrinking since December, and it's the smallest gain since August. So in this environment right now, we see that home sales are going down. Prices seem to stagnate a little bit. And this is simply because interest rates are high. People are clearly not willing to pay more and more and more for just to own a home. And when there's a lot of uncertainty, when people are expecting a recession, they're not gonna buy a very expensive house. They're gonna wait, and this can also be the primary cause of what's happening right now. Of course, this is only just for 1 month and for a few months in December, so we must just carefully watch and see how this is going to develop from here. Let's move to China. China discovers major uranium deposit in Ordos Basin. So what happened? China has discovered a substantial uranium deposit in a Jingchuan, not sure if I pronounced it correctly, area of the Ordos Basin in the northwestern region of the country. So what happened? They found a major amount of uranium um, used for energy. There's like this trend in the world where countries want to focus on sustainability, and instead of burning coals or burning wood or whatever, or using oil or gas, they want to use uranium because that's reducing the CO2 carbon footprint immensely. Besides that, China's progress in lithium exploration has boosted its global share of lithium reserves from 6 to 16.5%, raising its ranking from 6th to 2nd. So China is already one of the biggest um, supplier of minerals. And we're gonna read something about that later too. But it just found more and more of those minerals within its own soil. So uranium and lithium. So this is looking good for China. Okay, next, this is an update on the trade war between China and the US. So the US and China set very high tariffs for each other, more than 100%. Of course, it's effectively means a boycott because you cannot trade like that. And China already bans the export of rare earth metals and minerals to the US. This is primarily used for like the weapon industry, defense industry, and now it's basically banning export of Korean goods containing these minerals to the US as well. So what happened? The Chinese government has warned South Korean companies of retributions for exporting any product containing its critical metals to US military contractors. At least two of its transformer manufacturers have received official notes from the Chinese government demanding they cease exports of any power equipment containing Chinese origin heavy rare earth metals to US military contractors or the US military. So the US primarily uses these metals for their military, and China already banned the export of six of these metals, and now it's basically putting pressure on Korea to do the same as well. So why are they so important? What are they used for? Earlier this month, China issued an order to allow the export of six heavy rare earth metals and rare earth magnets from the country only with special export licenses. The so-called heavy rare earth metals are used in magnets, essential for assembling everything from cars and drones to robots and missiles. The metals are also vital in manufacturing jet engines, lasers, car headlights, and computer chips that power artificial intelligence servers and smartphones. But those six critical minerals are refined entirely in China, while 90% of rare earth magnets are produced in China. So this is of course a major hit for the US. Recently we have seen a trend that both countries want to be more independent from each other, and both US and China are looking for ways to get their goods from other countries. Now China is putting pressure on other countries like Korea to not export because they don't want the US to have them, of course. Then, some bad news for China. Apple plans to switch US iPhone assembly to India and blow to China. So what's happening? Apple has revealed that it's planning to move the assembly of all its iPhones sold in the US to India. Currently, the company still assembles most of its iPhones to China. So why is this happening? Because of the extremely high tariffs, the manufacturing of making iPhones in China will be extremely expensive, and that's why Apple wants to move the company to India. This could potentially take place as soon as next year as the company attempts to reduce its reliance on China in the wake of the current escalating trade and tariff tensions between the US and China. Apple is also looking to expand its production facilities in Vietnam, which is already a large Apple manufacturing hub. It's looking into investing in manufacturing facilities in Indonesia, although no concrete plans have revealed yet. Okay, so we see the first major company, the first major US company. Apple is already moving the assembly from China to India. This can end in two ways. One, the US will not cut the tariffs for China, and this will work out good for Apple because Apple cuts the costs because it will be easier to make them in India, or the tariffs will be cut, and then after a few years, Trump will be gone, a new president will be elected, and the whole tariff plan will be wiped out, and the point of moving and spending so much money on this will be unnecessary and will be a waste of resources. We're following this closely to see what scenario will happen. But in my opinion, this is a pretty risky move for Apple because you don't know how this is gonna work out. Maybe next month the tariffs will be gone. The US and China will work something out, and then this is all unnecessary. But it will still cost you a lot of money, time, and resources. So we will see. Then moving to Europe, the European Central Bank urged to cut interest rates only once more this year. So the European Central Bank has been cutting interest rates quite a few times now since last year, even more than the Fed, the Federal Reserve from the US. The European Central Bank should only enact one more quarter percentage point interest rate cut this year, despite wider risk to economic growth, according to the IMF. So the IMF is urging the ECB to not cut rates too much this year. We have a very clear recommendation for ECB. What we saw so far is a huge success in the disinflation effort, and monetary policy has worked. So we are expecting to sustainably hit the 2% inflation target in the second half of 2025. Our recommendation there is room for one more 25 basis point cut in the summer, and then the ECB should hold that 2% policy rate unless major shocks hit and there is need for recalibrating monetary policy. Like I said, the ECB has reduced rates seven times in quarter point increments in its latest cycle, starting in June 2024. Its most recent move lower was last week, taking the deposit facility its key rate to 2.25%. Inflation in the euro area cooled down to 2.2% in March. So that's looking good for the eurozone. And the ECB President Christine Lagarde told CNBC in a Tuesday interview that the disinflation process in the eurozone was nearing completion. All right. Then some good news for crypto out of the US from the Federal Reserve. They announces the withdrawal of guidance for banks, making it a little bit easier to deal with crypto in activities. As a result, the board will no longer expect banks to provide notification and will instead monitor banks' crypto asset activities through the normal supervisory process. So basically, extra rules for banks and their activities in crypto will be taken out. So this makes it way easier for banks to do these activities. Then, last but not least, more positive news for Bitcoin from Fidelity Digital Assets. We have seen the supply on exchanges dropping due to public company purchases. And this is bullish news because if big companies are buying lots and lots of Bitcoin and supply is drying out, sooner or later the Bitcoin price needs to rise because a lower supply usually means a higher price. So 2.6 million BTC on exchanges is left, and it's the lowest level since November 2018. Over 425k Bitcoin moved off exchanges since November 2024. So that's 5 months ago. And public companies have added nearly 250k Bitcoin post US election. So since the election in November, the companies have added a lot, and public companies have bought over 30k Bitcoin per month so far in 2025. So this is very bullish news for the crypto industry. The lower the supply, the higher the price will be in the end. And then the last news I want to discover in this journal is the fact that millionaires have been fleeing their country, and they're going primarily to these nations listed below. The biggest one is UAE, USA, Singapore, and Canada, the four biggest ones. They also an inflow of thousands and thousands of millionaires. Some countries are already talking about some kind of post-leave tax. That will basically mean that if you leave the country, you still need to pay tax for a few more years because you're seen as still basically an inhabitant. Because if millionaires leave their countries, of course, the country will miss huge amounts of tax income. So they're basically trying to find another way to, reduce that tax cut by taxing these people even after they left. Right now, it's still an idea. We need to wait for countries to really make this an official law, and until that time, millionaires can still flee. I'm curious to see what countries will actually adopt these kind of laws in real life. But right now, this is clearly showing that countries are like unsure how to deal with the situation of rich people leaving their country. Okay, that was it for this week's episode. If you want to see the previous week episode, click on this video on the screen. Don't forget to like, comment, and subscribe, and I catch you in the next one.